Let's now have a look at an example of a base trade. This is a bullish base pattern, and ideally we want to find them at higher time frame key areas of support or resistance. Here again, I've got a daily chart to start with, and you can see overall we're very much in a downtrend. Okay, if we have a look at the structure right here, we have, hopefully it stands out for you, we have a potential head and shoulders. This is the left shoulder, this is the head, and this is the right shoulder. Now this pattern would be pretty large in terms of stop loss. If you look to trade the right shoulder with a stop below here, you can see stop wise you're looking at 120 pips. So what you want to do is you want to try and fine tune your entry using the larger pattern as a reference point. So larger bullish inverse head and shoulders pattern. So our bias would be looking to the long side. What I want to do is take a Fibonacci tool and draw it from the low up to the high. Okay, and you can see prices come down and it's hit that 70.7 fib area. So we've got the confidence of this D level. You can see here support, resistance, back to support. We've also got this order block in here. Price may come down a bit lower. You can see that 79 level may come down a little bit lower, but it's at this area here that we're looking to look for a pattern on the smaller time frame. So if we just mark this off right here. Now remember, this is a daily chart, so it takes obviously quite a while to form this whole pattern, but it's at this area right here, the right shoulder, that I want to look to fine tune the entry using a smaller pattern if possible. So let's just get rid of this and this, and let's move down now to the 5-minute chart. Now the bullish base pattern, I like to trade these patterns on the 5 and the 1 minute chart. You can trade them on any time frame. I would say up to sort of the hourly chart is where you could start getting sort of decent value in terms of risk, reducing risk on the trade. Okay, so here's essentially the key level that we looked at. Let's just see if we can compress this a little bit. Not quite, we can't really see the right shoulder on the daily. I thought we may be able to. Okay, I'll just get rid of that fib level. So we've identified this key area. Remember, we're dealing with zones. So now what we want to do, unless we're going to use a big stop, like I said, on that daily head and shoulders, like 120 pips or something, we want to look to try and fine tune our entry. Now if we have a look at this area, you can see price starts to trade in a range. Okay, and this is essentially what I'm looking for when I'm looking for these possible base patterns. Okay, the reason I call it a base is because it forms a base. Okay, so pretty straightforward. You can see right here we have an area of support. Price closes below the level, comes back, tests resistance. Now it starts to trade in this range. Okay, so I'm watching price very, very closely. Remember, we've identified that higher time frame key area from the daily chart. We've got the right shoulder of the head and shoulders pattern with a good fib confluence. Now we're down to the 5-minute chart and we're looking for an entry. So you can see, watching this area, and what I'm looking for here is I'm looking for a commitment, a close above this area to look for that possible buying opportunity. So there's a pop higher. See that little pop higher? So what I'm looking for now, once I get that pop, is a retracement back to this area. I'm looking to place either a buy limit or just get in with a market order, buy market order with a stop loss below this low right here. Okay, so you can see at this moment in time, even the small range, we're like 23 pips. So we just follow price along a little bit here. Once it starts to break above this level, you want to look to place an order, like I said, either a limit order, or you can just watch and click in with a market order, your pending order. I'm just going to set this up. So buy limit 21.55. I want to put it at 56. Now you can put it, I suppose you could put it at 57. 57, we're trading around 64 at the moment. So yeah, let's go 1 pip above, so 56 plus a 1 pip spread. Stop loss at 21, let's call it 21.30. 21.30. Okay, so we're using a 27 pip stop. Sorry, what's going on there? 2157, 20 pip stop. I'll put that in there. And in terms of targets, just go to the hourly chart quickly. In terms of targets, well, we've got this area in here we can watch pretty closely. You can see here support, breaks through, comes back, tags as resistance. Okay, that's about 58 pips. We can definitely watch that area to take partial profits. On the 4-hour chart, you can see obviously a big move down. That area, it's pretty key. Have a look at that. Support in here, resistance, spikes through support, holds a support, comes back again, big move down. So you can see this area here is where we trade from the daily. So that 22.16 area, definitely something I want to watch. And you can either take full profits, or if we get up there, that is obviously, or we can look to scale. So let's just follow price along here. You can see the pending order. Okay, so we've just been triggered long. Let's just go to the working positions at 21.57, and we're now looking for a little pop up. Now, in terms of reducing risk on the trade like this, I don't want to move the stop up too quickly. Okay, it's just my preference. You can look at reducing risk. You see this swing low here, you can get your stop below there, and once price breaks this area right here, you can look to get your stop up. Just remember, depending on your objective on the trade, like for example, you see this area here. I know we showed the example of using these little swings to reduce your risk. There's nothing wrong with doing that. Okay, so if price pops this level, you can use this as a barrier. It just depends on the objective. Okay, so you see how price pops up, that's good for the trade. So if you're very aggressive, you could look at reducing your risk to break even now. What I will do is I'm actually going to get my stop. I'll get it up to, from this area, I'll reduce it to just below, let's say 21.48. So we've got a bit of risk in the trade, and we'll see what happens. So we'll modify that. As I said, there's no black and white with this sort of risk management. Sometimes I'll reduce all the risk as quickly as possible. Other times I'll leave the full stop loss alone, and then be prepared to take the full hit on the trade. It really is going to depend on the market environment. Okay, time of day, what's the sentiment, what's the rest of the market environment doing, do we have indices dropping off the face of the page, etc, etc. So these are things I obviously want to take into account. So this is a level, you see that D level, it holds a support now. That's area I want to see move up. You've got this area of resistance here, you see this little block here. These areas you can even look to scalp if you're very aggressive, here and here. So we're looking for this level to hold for us. You can see time of day here, also very quiet. The session's sort of into that Asian session now, end of New York, or end of, yeah, sort of getting towards the end of New York. Very quiet time of day in terms of liquidity. And you can see just by having a look at the candle action, okay, not going anywhere fast. So if you want, you can start reducing your risk on these swings when it's very quiet like this in terms of liquidity. Okay, this quiet time, I'm far less inclined to move my stop below these swings. Okay, because what happens very often is, if you're still in the trade during the London Open, what the institutional players like to do is they like to pull price down, okay, run to the lows like this, because they know that stop losses sit here, so they come after those stops to get a better fill. Okay, they basically after that liquidity so they can get a better fill for their larger positions. Let me just step this forward. You can see very low in terms of liquidity here. see our price comes down like this, runs this low, okay, finding support on this dealing level, okay. This running of the low, okay, that's a planned move. Obviously I can't look back and say that definitely happened, but more times than not, you put your stop below a little low like this, okay, price comes down, it takes the stops out, and you'll more often than not see price move back up into the range, okay. And you can see price runs the lows, finds that support a little bit lower, pops up, okay. It's normally the professional order flow, professional money coming into the market. So you can see very low liquidity, but you see our price spikes down, takes the lows out here, finding this area of support. Now it starts to break up. So once we start breaking, you see these highs here, once we start breaking these highs, I'll now start getting my risk up to at least break even, or even if I'm very aggressive, you see this low here, just below this area. So let's move to break even on this. We've stopped to break even. There we go, 57, 57. And remember, we're looking at our target first area is that 4-hour hourly area of resistance up there. Like to see this level hold now. Little spike lower. Okay, you can see another little dealing level here, right there. Okay, what we can do is we can we're now obviously up 39 pips. I'm going to get a little bit more aggressive with this because now price is starting to release nicely. So I'm going to move my stop up on this. You see we've got this level here. Okay, nice dealing of support resistance. Holds resistance, comes back as support. I'm going to move my stop up now just below this area. So 21.75. 21.75. Lock something in there. 21.75. Okay, and here again, just switch back to the different time frames, have a look and see what's going on there. There's the 15-minute chart. Okay, it sees horrible range in the Asian session. Now we're starting to see a bit of liquidity coming in with Frankfurt, starting to get towards that London Open here. Once again, you see how we spoke about this area here. Last little bearish candle, closes above, comes back, retests, now it releases. Same thing here, you see it comes back. Let's zoom this up. Okay, see here, closes above, comes back, retests this bearish candle. Same thing over here, closes above, come back, retest that. That's where the institutional flows are coming in, okay. So moving up towards the target, we've got, you see this level here, okay, last little bullish candle for price break. That area, watch that level closely. You could even look to take a little short trade there if you're very aggressive. As I said, we had a very key area on the higher time frame. This is the hourly chart, okay. So you can see our price. We trade in this range, and I love scalping these little things. Trading a tight range, it gets closed above the range, comes back, retest the range. Okay, quick move up in the early mornings like this. You can play a quick 10-20 pip move like that. No problem at all. So now we're starting to move up. This is the first area. Let's go back to the 5, and I'll just step this forward a little bit. Okay, so that's the first area there. What I'm going to do is I'm going to take partials. That's 50 pips up, close part of the position. So we close half of that. So we've taken half the position up at that resistance area. As I said, this area here, you could look even to take a trade short if you wanted to, a little bit on the aggressive side, but nevertheless, you can see a little bounce off that area. Now we start to release. I like that release out. Let's just have a look at the hourly time frame. We want to see a close above this area, okay, because if we get a close above here, we're likely to see this level now hold as potential support. In terms of moving the stop up now on this hourly chart, there's really nothing on this open leg, okay. There's no swing low. You see this swing here, okay. There's nothing to protect the market coming back on you besides this area. So I want to see if price comes back, holds here, and then possibly takes a leg up, then I want to reduce some risk. Okay, so we've now obviously had a nice pop up. You see this area here, okay, another place you can take some profits up 120 pips, and in fact we're right up at this key resistance. Let's just go to the 4-hour chart. Little dealing level in here is your resistance here. In there. Okay, nice level across there. That's a good place to be taking profits on the rest of the position. And what I'm going to do is, you see these levels here, this base, little base here, rallies, little base here, coming up to the resistance area. What I'm going to do is I'm going to be seriously aggressive here. I'm going to move my stop loss just below this area here. Okay, we at that key resistance area. I don't want to just close the position because this thing may take off another 100 pips. So what I want to do is I want to be very aggressive, and more often than not it will just come back on you and stop you out. But you may get the occasional one where you have news and the thing just takes off like a rocket. Okay, so let's put it 2 pips below. We've got this little base. We just have a look here. You see, you got this tiny little bearish candle. You've got that as a reference. Maybe you see how it comes down and bounces. If there's serious buying power here, we may just use that and head higher. Not looking good. Okay, there's the pop low. We've just been taken out. If we just go have a look at the trade there, we took 51 on partials and we took 119 on the remaining. So a nice little trade there. That was a base trade, bullish base trade set up at key higher time frame support from the daily, also that right shoulder on the daily chart. Okay, we can see just price does eventually drop down, and then you see how it finds support there. Right here, find support, bang, another leg up. Okay, now as I said, sometimes it just stalls and then continues up. So there's never going to be a one way does it all kind of thing with these trades. All right, just understand that there's no black and white method for this. You've got to understand price action, understand the environment, and it just takes a bit of time.